Investors taking a bite out of shares of Cheesecake, although now you can see trending higher, so shaking off those earlier losses that we saw following a downgrade from Goldman Sachs. Now the company getting a little bit more bearish on the name, hitting the stock with a sell rating and a $29 price target on shares of Cake, C-A-K-E. Now, analyst Jared Garber making the argument that he's seeing declining traffic to restaurants amid a, quote, volatile macro backdrop as a key concern heading into 2023. Jared, consumers beginning to pull back on spending when there really is no easing up of inflation, at least in sight right now. The Fed remains committed to its rate hikes. I think that's spooking investor sentiment and certainly consumer spending trends. And this analyst here from Goldman saying that inflation, labor costs are the two main issues facing Cheesecake Factory right now, and more difficult to pass through menu price increases he sees on the horizon for the new year.
It's all about the margins, right? We have a very difficult labor environment. We have a very difficult pricing environment. And as you said, the Fed the Fed is its own animal. So we're not even bringing the Fed into this. But this situation is probably going to last several more quarters. Not going to see any change in this. And I just want to quote from the ratings downgrade paragraph here in the Goldman note. We see risk that traffic declines accelerate with high levels of pricing, and the mid to higher income consumer expected to see the lowest year-over-year discretionary cash flow growth in 2023, while our proprietary survey data that suggests these consumers seek to spend less given the volatile macro backdrop, high inflation and wealth effects. So kind of a worst of both cases there. I think this is continuing to be a bifurcated space. It's going to be one of execution, and it's not just a restaurant industry. You're going to have winners and you're going to have losers. You're going to have those companies which are able to take advantage of the new environment or at least not be harmed by it, and others that won't. And this is simply a story of have and have-nots, I think.
Yeah, certainly. And we just had the year-to-date price action on the stock so far since January 1st. And if you look at that, year-to-date, it's off just about 14%. So more broadly speaking, in line with the broader market. So I think it's been able to weather the downturn that we've seen in recent months a lot better than some of its peers, at least.
Yes.